How's it going, you guys? Today we are going to go over something I think every trader needs to learn and a tool that every trader needs to have in their bag, and that is knowing how to read live volume. I'm going to explain legacy.aggr.trade, my live volume indicator, how to use it, why we use it, how to use it properly in your trading strategy, and the do's and don'ts so that way you avoid shitting your dick. A term I use for getting a little bit too overzealous or overexcited when an actual move isn't happening. So what is legacy.aggr.trade? Legacy.aggr.trade is a live volume aggregator that compiles the amount of volume that is actually being opened in the market. I think of it as the breadth in the market. Order blocks and liquidity heat maps are cool, but at the end of the day, it only matters about what volume is actually being put through the market. And legacy.aggr.trade helps you see that. We're going to go over how to set it up, what type of volumes to look out for, what type of volumes not to look out for, and little tips and trickies. But first, let's go over the setup. So there are two versions of this aggregator. There is the aggr.trade and the legacy.aggr.trade. This is the old version. This is the one we use. Okay. The newer version looks nicer, but it is boof. It is booty butt cheeks, and it is ass. It fucking sucks, dude. I tried this one. You can't get it. You can't get it good. It's not good. So this is the reason why we use the legacy version. You can set it up properly and it gives you a lot clearer reads than the older one. So we use legacy.aggr.trade. So let's get into the settings that we need to properly aggregate our data. Obviously, we are going to be looking at BTC. You want to click everything green that you see clicked. These stats are optional. If you like the stats, keep them on. If you don't like them, you can turn them off. But what is very important is this threshold. Make sure you have the first two thresholds set to 100K, the third threshold set to 1 million, the threshold after that set to 10 million. What this will do is it'll color code the orders coming in that are larger, so you'll be like, okay, cool, people are putting down fat stacks. The next part is important, very important, the counter. This is the aggregator. This is the most important part right here. You want to turn your counter on and you want to set it for 30 seconds, 1 minute, 5 minutes, 15 minutes, 30 minutes, 1 hour, 4 hours, 12 hours, and 24 hours. How you do that is obviously 30S, 1M, 5M, 15M, 30M, 1H, 4H, 12H. You can put 1D or 24H. Now, after you do that, you have to make sure to go down and turn on the exchanges available to you. A lot of these exchanges will already be on, but make sure you click them. Sometimes if you are in a geographic location, some exchanges may not be available to you, so you get what you get. Now that we have our settings set, we can now focus on aggregating the data. So once you got everything set up, all you need to do is click reload, and now it's going to be tracking based off of your new settings. One really helpful feature that I love about this aggregator is the audio feature. If a high-pitched ding happens, somebody put in a long. If a low-pitched ding happens, somebody put in a short. I could be doing something else, and all of a sudden, if a whole bunch of noise happens at 1 second, I know that there's volume rushing in. I can come back into my room, go check out my computer, see what's happening in the market. This audio setting is fucking goated. So I like to adjust the gain to 1.5 and the pitch to 1.5. And it gives you nice little dings and dongs. The bigger the order, the louder the ding or the dong. Word of warning, we do not download the browser extension. It opens up your computer to malware. What we do is we just click the pop-up. Once you click the pop-up, it has it on the side. You can put it down, bing, bang, boom, and let it start aggregating. This is an aggregator, you guys. It doesn't come through with all of the data immediately. You have to let it cook. So the longer you keep it open, the more data you're gonna have. If you close your computer, you lose your data. If you refresh it, you lose the data. Now, it does take a lot of resources from your computer. So if you're going to keep this on and game, or keep this on and do something else on your computer that's high demand, you might want to close your aggregator down and open it up after you do that. So once you have it going, it's going. Call me Rachel Ray. I already have an aggregator cooking. So let's move this guy over. This is the data that has been coming in for the day. Let's just say you've let your aggregator run for 24 hours. Cool. You now have a base to start reading the data. Now let's go into how we read the live volume data and how we use it to influence our trades and gauge the sentiment of the market. So you've got live volume running. It's been running for a while, and you have the full volume profile going. What I do in the morning is I wake up. The first thing I do is I look at the 24-hour and 12-hour markers and see who controls the board. What I mean by that is I look for the imbalances of the volume. Right now it's the weekend. We're getting boo-boo volume, so great time to make a video, not good time for like good volume. But as of right now on the 24-hour, the shorts are only up by around 300 million. And on the 12-hour, the shorts are up by 200 million. That's a very, very, very small difference in the 12 and the 24-hour. You usually want to see differences of about 1 billion in those larger time frames. So this could be easily manipulated really fast by volume. The 4 hours neck and neck with the shorters having only about 90 million difference. So if I woke up today, I would not want to trade this market because it is low volume, and when we trade, we want to trade a market with high volumes rushing in. Something like this, with it being the weekend, is like how you get trapped. Very thin order books. 100 million could definitely move this up or down really easy. So that's the first thing we do, is we look at the overall higher time frames on the aggregator to see who controls the board. Right now, the bears control the board, but only by a little bit. Now, when I talk about volume, we're always talking about differences in volume. We're not just talking about that said amount. If I say 50 million come in, it needs to be a difference of 50 million on the 15 minutes at least. So if you were to open up a scalp and we got 50 million come in 15 minutes, that is scalpable. I would not hold that for longer, because anything under 200 million gets us into something I call the bamboozle volume. Market makers like to pump in differences of 200 million or less to make you think we're about to break levels, and then they reverse it. So bamboozle volume is a difference of, I would say, 250 million to 180 million will come in, and then it'll stop, it'll lull out, and then you'll see them turn into hundreds of thousands, and then it'll reverse. So always beware of bamboozle volume. The real actionable volume happens when there is a difference of around 300 million in 15 minutes. If we get 300 million difference in 15 minutes, the market goes whichever way that difference is. So right now, if we were to have, it always starts off 50 million, 50 million, 50 million will come in, and it'll come in. And what you're doing is you're looking for consistent volume to come in. And if we get to a 300 million difference within 15 minutes, usually that constitutes a tide shift. The market will go whichever way that volume is taking it. Now, if 500 million to 1 billion come in, we are talking pump/dump territory. 500 million comes in, we're going to fucking rip. Okay? If 1 billion comes in within 15 minutes, green. If 1 billion comes in 15 minutes, red, shit's about to happen. So keep that in mind. Reading volume's all about reading the differences. So a difference of 50 million is scalpable. You're still in the bamboozle regions. Anything under 250 million, I would highly regard it as sus, because it is not enough to break levels. Around 300 million, we actually do start breaking levels. 500 to a billion difference in 15 minutes, and we fucking skyrocket. This next part's going to seem a little antithetical and a little confusing to a lot of new traders, but if you are trying to enter the market, you want to enter on opposite volume as it lulls. What I mean by that, for instance, we got 500 million in volume, and it on Bitcoin, we rushed up. We went up to this level, like 118.4. These hundreds of millions start lulling out, meaning the millions, like the constant 50 million, 30 million that comes in starts turning into 100,000 or less. Most likely, I would check my RSI and my stochastic. If they're overbought and price is lulling, I would try a short. The same thing goes for longs. So let's just say, for instance, we get a rush of volume down 300 to 500 million, and we go down and we retest somewhere around this 116.8 area, and then the volume starts to cut out and your stochastic RSI and your RSI are oversold. That might be a good area for you to throw up a long. Watching for the volume to lull out is always your first sign that the move is fatiguing and that the opposite side might end up coming in to defend. If you're lucky, you have a limit order set for that region and you know how to plan correctly. But if you are watching the market and trying to catch some knives, that'll be the best bet, is to wait for volume to rush in. Obviously, if you are a longer, you want to wait for some red candles to form before you enter, and then enter when it's most optimal. It's the scariest way to enter the market, but it is the best way to enter the market. Same goes for shorters. You want to wait for the volume to rush up, lull, and then enter. It always looks like it's going to break out. People are always super bullish at that area, but if you watch volume, that'll tell the story. So watching your live volume will help you understand, oh, nice, this will be a good area to enter, or I should probably wait for the volume to cut back a little bit. Understanding live volume is so important, and then when you end up being able to mix it with stochastic RSIs, learning how to chart high time frame supports and resistance, video coming out sooner than you think, and understanding overall sentiment of the market, it is fucking deadly, you guys. So in summation, we use legacy aggr to watch live volume and gauge the sentiment and the flow of which way the market's going to go. The 12 and the 24 hour we use to see who has control of the board. We use the differences on the 15 and the 30 minute to understand which way the market's going to swing. And we use the smaller time frames to understand where the lull might happen so we can enter. That is also in conjunction with other indicators, higher time frame support and resistances, all that good stuff. A couple things to look out for on legacy aggr is that it does pull a lot of VRAM from your computer. So if you do have it on for a long time, expect your computer to act slow or sluggish. You're going to have to restart your computer every once in a while. I do not recommend keeping legacy.aggr.trade on your computer for like 2 weeks at a time. You're going to fry your shit. Also, with that being said, if you ever see a super bombastic position get opened, the market looks toppy and it's like 20 million long gets opened, that's probably somebody closing out along. The same thing with the market dumping. If you see a $20 million short get opened, that's probably somebody closing out their position. Be wary of super big positions. And if it is somebody throwing out a position that large, usually the exchanges try to bum hunt them. Smart whales like to layer their orders in. And that is my crash course on live volume. As always, if you want to see it in action, I go live daily on Twitch. Also, if you want a free place to learn a little bit more on how to trade with other human beings, be in a group of crypto people that aren't self-loathing weird incels, come on through to the Biscuit Box. We got you. It's 100% free forever. We're going to grow. It'll never be charged. I'm constantly in the voice chat. There's other traders there that are as good, if not better than me. We are growing an amazing community that actually cares about profitability rather than some dude trying to suck your pockets dry. Come on through. It'll do you a world of benefits and it costs you absolutely nothing. Look out for my video soon on how I chart. I'm going to go over higher time frame supports and resistances and how I do my parallel channels and explain how I use the higher time frames to gauge where I will enter the market in the future. If you liked the video, please give the video a like. If you haven't subscribed already, please subscribe. Join the Discord. It's the place to be at. And follow me on Twitch. Thank you so much for fucking watching. I appreciate every single one of you. Bye.